you are a board member of the IASB and previously the CFO of First Rand Banking Group, who is one of the largest banking group in South Africa. So the preparation of IFRS 9 was informed by many experts, and meetings were done with the banking industry. So how did your past experience as a banker inform these discussions and the preparation of the standard?
So I came into the process of the setting of IFRS 9 fairly late in the process. There had already been some work done. That for me was quite a big advantage because it meant that I had actually seen a lot of the preparation for IFRS 9 from the other side of the table, if you like. Essentially, we'd been working as a bank on understanding how it would work, what the implications would be. So coming onto the board, I was able to bring a lot of that experience to play. And a big part of the conversations we had at the board were about operational issues, how operationally it could be achieved, what the objective of the standard was. And as you may be aware, we had some problems from the exposure draft that I sort of walked into as I arrived at the board, in that many banks had come back and said it wasn't operational. So the challenge for the board was to develop an operational solution that still met its objectives. And I was able to bring a lot of that experience to bear in my because of my background.
Perfect. How does IFRS 9 interact with Prudential Regulation? And in this regard, what is your relationship with the Basel Committee of Banking Supervision?
So IFRS 9 interacts in a lot of ways with Prudential Regulation. From an IFRS perspective, we always make a big point of saying that the objective of financial accounting is different from the objective of prudential accounting. Prudential is about making sure that there is capital available in the future. Financial accounting is about reporting a point-in-time picture. At the same time, we accept that we have many, many commonalities, many common areas of interest. And that particularly comes through in the IFRS 9 space in a standard like impairment. And what we wanted to do was to make sure that we had a common framework, a common starting point for the IFRS 9 accounting. That meant that we did deal a lot with the prudential regulators all the way through the process. And there are numerous different ways that we deal with prudential regulators. And we haven't stopped just because the standard is now produced. We've continued to talk to prudential regulators, the Basel Committee, and others through the production of their own documents to help people apply the standard, and also through our own Transition Resources Group, which is a group targeted at trying to achieve a common interpretation of what the standard means.
Okay. And in general, do you receive a lot of input from supervisory authorities while you set up new standards?
That varies. If I look at the type of input we've had on standards like banking and insurance, where in particular prudential regulators have a real skin in the game, if you like, we've had a lot of interaction and a continuous interaction. And I think that's benefited the standards. I think the standards have been a lot better because of that. There are a couple of other areas where we see particular issues come up. The one at the moment is materiality, where regulators have a very strong view on what materiality should be. For the rest, I'd say we have less involvement with regulators. The regulators don't see it as having an immediate effect on them. Nonetheless, I think we do have some interaction, and it is increasing over time.
Over the last 3 years, you presented IFRS 9 at various stages of its preparation and before it was issued to supervisors in Europe and Central Asia. So I would like to ask you, how do you value this type of interaction and how do you use the feedback you receive?
I think it's interesting. This has been a little bit of a journey because we started doing these presentations shortly before IFRS 9 was finalized, when we were still looking at the final decisions and the final wording. We've progressed through the initial publication, through some of the implementation issues. And so it really has been a nice experiment to just see how the interaction has worked. I think there are a couple of things that are really important in that. Firstly, a lot of people perceive these type of sessions as a one-way communication. The IASB communicating to the regulators. It is not. The feedback we get out of the sessions, the questions that people ask, the examples that people give us, at the early stages of the project were very helpful in making sure we got the standard right. And we've talked about it in the past. There were some actual changes we made to the standard as a consequence of feedback that came from these sessions. As we've progressed through the standard, as we get now to the later stages into implementation, the IASB involves itself in implementation support. We're trying to give guidance. And again, these conversations inform that process. They help us actually make the implementation guidance better in the same way as they helped us make the standard better. So I think I see these certainly as very much a two-way communication. And we don't always get the opportunity to meet with all the regulators. We obviously see some of the big guys, the Basel Committee and others. But the opportunity to meet a wider, broader swathe of regulators is an important part of what these workshops certainly provide us with an opportunity of doing.
Perfect, thank you. Based on your previous experience in banking, what do you see as the key challenges for the banking industry with regards to the implementation of IFRS?
Impairment. Impairment really is the big system issue. And the problem, I think, for many banks is they've looked at this and they thought, that's not too bad. I can do this. I don't have too much of a problem with it. Realistically, though, it is a significant issue in terms of data requirement, in terms of systems requirements, even in terms of the way internally people think about the impairment process. And I think there are still banks that are underprepared. I think there are still banks that are behind the curve. We're not a long way away now from implementing the standard in full. Banks should already have a very good idea of what the outcome is going to be, and I think they're still struggling with that.
I think you started to answer the last question. It was about any advice, suggestion for the banks and the supervisors.
So I'd actually say the first thing, the most important thing is talking. I think it is critical that the regulators and the banks are talking to each other. In part, as you say from my previous question, it's about the idea that the banks should be talking, or the regulators should be talking to the banks to make sure they are ready. I think that is a critical thing. But I think the other thing to bear in mind, accounting standards don't change economics. But what they do is they change the perception of economics. People picking up bank financial statements after IFRS 9 are going to get a different view. They're going to understand the economics differently. They're going to understand the way the economics work differently. Prudential regulators have a responsibility to help banks navigate through difficult times. Right now, still a hangover, I guess, from the 2008 crisis. Banks are not always seen in the most positive light. Having your prudential regulator with you, talking to them about the issues, making sure from a regulator perspective you understand how the numbers are going to change, allows you to anticipate what the problems are going to be. And I just think talk. There needs to be an ongoing conversation for the next probably 18 months to 2 years between regulators and the entities they regulate to make sure there are no surprises.
Okay. Mr. Scott, thank you very much for your time and for this interview.
Pleasure.
Thank you.